And record on this computer, and I'm going to share my screen and turn on my video. Cool. Awesome. What's going on, guys? So hope you guys were on like last week, because last week was pretty fire. We had quite a couple of calls. Just in case you guys didn't notice, a little bit of an update. Went in, updated some branding, went and updated you guys in the back office, or at the back office on the Telegram. The Telegram just specifically says I'm going to be sending out some premium signals from here on out until I get put on IML TV or am put on Pit Talk or whatever the heck product they want to put me on until further notice. And excuse me if I sound like a frog. There's been like a little bit of an illness going around. But for those of you guys who are new to this, what we're going to go over, we're basically just going to be going over some pairs that I've selected that look like some pretty premium setups that match my trading plan. And if you haven't gotten a trading plan, y'all better get one down like right now. Seriously. But so basically, we're going to go over the trade that we committed to the other day. I did close. I do believe I closed it out on the Telegram. I'm not entirely sure if I did or not. I mean, look, we closed out at 239 pips on AUDJPY. So for those of you that keep skipping out on Market Outlook, you better not do it, because I'm giving out free pips to you guys. All right, let me see here. So tell me, guys, have you guys been trading live? If you guys have been trading live, how's your experience been so far? What pairs have you got? Were you guys trading last week? Let's put a couple of messages in there if you guys want to unmute your mics and tell me what's going on. I know that we're not going to be able to do that on IML TV, but still. If not, you guys can just type in just go ahead and type in what you guys have been trading. Let me see here. AJ, what's up, Spence? Appreciate you, bro. All right, so we're just going to go over it really quick, just a general, overview of it. Yeah, I marked a couple of blue marks on there, and it looks a little sloppy, but that's okay. That there in the background, looking at my video, that's my bathroom. It's pretty cool. Anyways, so when we went and looked at AJ, this is like on Sunday. Come on, drag over. This is the Sunday open. We opened up way clear up here at like 89. I was suspecting to sell from this accumulation. Didn't necessarily happen that way. What did end up happening though is that there's a big gap that just, huge gap happened at market open. And I'm like, holy cow, that's a crazy looking gap up there. But nonetheless, we did have a pretty decent harmonic, a bat pattern. It looks like more of a bat pattern to me. It looks like we had a pretty decent, bat pattern clear all the way up here at the entry, which is at like 83.90. I know that we kind of put it out there at like 83.76. That was our original call. And then out of nowhere, somehow, some way, out of the whole week, we had a lot of it was kind of like floating, almost like a dead cat bounce all the way down. It was very slow. I know that a lot of us aren't very used to the very slow movements, but for those of you that, stayed in the trade, for those of you that, probably stacked on some pretty high lot sizes. I don't know why, but everybody tends to do that, especially when we make calls like this. It looks like, we all collected a fair amount of pips, about 239 pips out of this entire movement. So I want to congratulate you guys if you all held that 239 pips. So let's see what's going on in the chat. Let's see. 30 pips up on GBP USD already. Saw the double bottom. Caught Euro USD last Thursday as well. Live trading. Been awesome lately. First Market Outlook call I've been on. I'm so excited. Expecting an upward move on AJ. Cool. Okay. I appreciate you, Max Million. I'm just going to call you Max, but I appreciate you. You're an awesome person. Everybody here is designed to grow. So just keep a growth mindset at all times when we're walking into this. I learn things from people too. I'm not like the Master of Oz. I'm not like a stupid master at, trading. I'm always learning, of course. I just have some knowledge in specific types of trades that I like to share with you guys. And that's basically all this is on market outlook. So, but AJ, I could see that. I could see it going up, or I can just see this being some kind of like, a little bit of a consolidation, continuation down to this area. Who knows? I'm not going to sit there and tell you what Vladimir, whether or not it's going to go up or go down. I do have a couple of arrows though that kind of point to the price action that I'm expecting from AUD/JPY, just kind of like leading into the actual depiction of the pairs now. That is definitely plausible, and the reason why is because we also have a triple bottom, technically a 4 bottoms on, AUD/USD. And here's what I'm expecting with AUD/USD. Just moving into the new week, I'm expecting at least maybe a little bit of a gap. I don't want it to come down here past 0.7190. I really don't think it should. And if it does, then, we're probably going to come right back down here to about 71.57. And my stop on AUD/USD is 71.85. So it's going to be like right here where this bottom green line, like that's the last minute structure that if it busts through that, then we're going to expect to sell off for quite some time. And I'm expecting we may, shoot up a little bit. And if we do, awesome. I would like to get out of this whole consolidation area period and shoot up to about 72.96, 73.18. I want to go up to at least 73.56. Those would be some great areas to go to. And one thing I want to point out here, guys, also is just take into consideration there's a little bit of a divergence there. So if you have some divergence mixed with this entire market structure, GBP/USD looks almost pretty similar. There's a nice 1, 2, 3 touch. This is on the 4. This is on not the 4 hours, is the daily. Let me move this whole, camera thing. Okay. So looking into GBP/USD, I mean, there's 1, 2, 3, and then you go all the way back here, 4, 5 touches right here at this weird little area. And there's quite a couple of gaps. And one thing I've been studying, if you guys haven't already, the secret code of Japanese candlesticks. All of those who do know, fanboys, fan women, I'm a big fanboy of candlestick patterns and structure. So keep in mind that this right here, order block means that this is basically where all the institutions are putting their money, where they're putting their orders. So if I were you, if I were anybody, and remember this is a harmonic pattern too, this harmonic pattern could be still somewhat applicable to this entry of 1.27-ish in the wicks. This candle right here kind of signifies, in my honest opinion, there may be a little bit more push to the downside. I'm not entirely sure. But one of the buy limits that I have up right now is 1.2685. So there could be a little bit more push to the downside. That's just like right here within the, dang it, I gotta move this thing again. That's just like right up in here within these wicks. So just bear that in mind. If that does happen, we're going to have a pretty nice, we can potentially have a pretty nice buy ride all the way up to possibly 1.3672. I'm not saying that that's not entirely possible. That just looks like, to me, that's where we would head outside of this, whole, accumulation box, my light blue accumulation box. So with that being said, I mean, that's kind of like the same scenario I'm looking for with AUD/USD. I mean, we're gonna go ahead and just kind of dissect what should we be looking for in order to expect a movement to the upside with GBP/USD. Well, here are some pretty good factors, folks. Some nice pinnage, we call that the pin bar. As long as we got a nice pin bar and a pretty decent, railroad. Those look like railroad tracks to me. Don't get it twisted, but some people kind of like to, there has to be a specific type of railroad, which there really doesn't. Just make sure that it looks somewhat equal like that, because if it didn't pierce that price point, price is very equal on 2 candlesticks, that kind of qualifies as a railroad pattern, and that to me is a reversal pattern. So if I see it on the 4 hour, I most definitely like to see multiple, 1, 2, just these 2 right here, and then the pin bar in the middle. That could kind of set up for, to me, a nice buy. And the reason why it's just candlestick patterns. It's just something that, I've back tested for quite some time. I've read them from these books, countless books on candlestick patterns. And one of the wealthiest traders I know of, who isn't alive, was dated back in, I think it was the early 1600s. And I'll actually show you who it is. Hang on one second. Candlestick Bible. Let's look at that real quick. Okay, so what's this guy's name? I can't even remember. Where's that? Not that book. Let's go back to, I want to go to the YouTube thing. Let's go to this one. Let's take a look at this. So this is kind of like what I started with back in the day. So Munhisa Hama is his name. He is a Chinese, I think he was a Chinese rice trader. So from back in the day of 1700, when candlestick patterns, and I know the bar charts are actually like, they were created way back then, but let's talk about like, candlestick patterns. Something I've noticed in my own personal trading is that I've gotten 10 times more accurate. I've become more accurate by using candlestick patterns in conjunction with something like Wyckoff, Elliott Wave, or not candlesticks, right? Fibonacci, price clustering, and stuff like that. Because if you guys remember, like walking through my trading plan, if you guys go on YouTube, I walk you guys through my trading plan, and I basically just point out that I know candlestick patterns. Some of those candlestick patterns can be very, very in the right places. Can tell you the answer. It's kind of like cheating on a test almost. So whenever I see candlesticks like this that were put in books like that, because this is kind of like this book right here, The Secret Code of Japanese Candlesticks, it's a deeper understanding of the candlestick patterns that I'm talking about in the Candlestick Trading Bible. Because yeah, it's a book, it's a long book, it's like 200 pages, and so is The Secret. This one's like 213 pages, but the preface doesn't count. So whenever I'm looking into pairs like this and I see just like in a very general sense, like, dude, there's like a once in a lifetime opportunity when you're put in situations where you get to see like there's the gap here, and there's probably a gap within, there's a bunch of gaps within all of these, ranges right here. And when you get into a range like this, you get a once in a lifetime opportunity to just, not once in a lifetime opportunity. It's not as rare as you think it is, but it's an opportunity to catch anywhere from, and I'll kind of explain this. When you can find precision setups like this, it's really easy to see that like at least 500 pips could possibly be the max, not the max, but like the minimum. And then if you kind of scroll out, I mean, like, look at how big of a return, there's not really much resistance between, that whole, accumulation phase. It's like this whole accumulation right here. Like this is nothing. Like there's nothing up here to restrict the upwards movement of GBP USD, if that makes sense. Now I gotta erase all that. But you're getting what I'm saying. Like inside of this book, this book right here, The Secret Code of Japanese Candlesticks, this kind of taught me in between candlesticks. When I look at gaps now, they're more like, yeah, I've got liquidity zones, but I don't like really account for them to be like that because there's more psychological, and that's what we do on Wednesdays is we look at, psychological factors. We account for more psychological factors in the market sentimentally, because when I'm approaching a market, I need to know how I feel about the market. I need to know how, like, you got to know how you feel whenever you're approaching a specific situation. And that's what the trading plan is for, is so that way you can, you're basically just like, okay, how do I feel in this very moment risking my equity? How do I feel on a Sunday, on a Monday, Tuesday, Wednesday? Like, how do I feel at this current moment? Like, do the market conditions like match? That's how candlestick patterns in market structure are in like specific areas, very specific areas like this right here. Like, wow, this is like the most perfect area. And I can't believe I'm doing it right now on a market outlook in December, which is great. I love that. That I'm able to show this to you guys, because this is something that I've been preaching forever, but haven't been able to give you guys like an actual physical, face-to-face value for you guys to look at it, for you guys to understand what I'm talking about. And this right here is where this is the most important area to find candlestick patterns, right? So if you go over here to the left, back in August 15th, this is August 15th of 2018, right? So let's dissect this on, the 4 hour. This is something important you need to know. So there's a lot of exhaustion. And if I were to pull up let's see, I need to pull up my RSI. Boom. Okay, awesome. So here's the previous bottom. Here's the next bottom. Here's a lot of just oversold, right? Severely oversold in all conditions. And we had our first gap up here, right? So whenever I see gaps like this, here's what my trading plan is more leaning towards now. When I see a gap like this, that just simply means, okay, we're starting an uptrend, right? I need to have at least 3 gaps in between in order to exit the trade. So maybe, later on, I'm sure like within somewhere in here, there's the third gap. This is the third gap. Where's the second? Had the second get just now. It's like very subtle. Like here's the 3 black crows, by the way. That's crazy. I'll just continue down like that. All right. So where's that third gap at? I can't find the third gap, but you know what I mean. So look for the third gap, and then look. So there's 2, 3. Here's third gap, and then you just kind of like break down right here, right? So as soon as we broke down, now I'm looking for. There's 1 right there. There's 2 right there. So the third one was somewhere around in here. Very small, very subtle. And when it happens, here's a Marubozu also. Nothing, that's kind of like very important. A Marubozu, by the way, guys, I know you guys just saw this, like extreme, like bodies with no candles, with no, shadow, no candlestick. Okay. So now we were in GBP USD. So we were looking for the buy, right? Well, market's still closed, although it's 4. No, it's not 4 yet. Pretty close. Okay, so like I was saying, so you're looking for more candlestick patterns, right? This could have been a nice signal. It could have been, but let's not forget that, daily could probably be a little bit more powerful than 4 hour, because higher time frames, give us better signals, okay? So look at right here, indecision. A lot of this is indecision right down here in this price point. So we've already made a decision already not to stay there. Oh, perfect. Awesome. So the market's open. Yes, that's what I'm talking about, baby. Let me see here. I'm like 1 pip away from my stop on odd USD. That's crazy. I kind of knew that was going to happen. And now guess what? So that gives us more. Oh, fuck. Yep, I got stopped out. But that's perfectly fine. So guess what happened right here, guys? Excuse me, I just cussed. All right, so we clearly broke through this right here. So what I'm going to tell you to do, I hate the fact that we broke through it, but then again, there's this other structure that needed to be tested. So personally, I'm probably going to buy it again, but I'm not. Oh God, that's such a hard decision too. It's prime. It's just prime. That's all it is. Where's it at? 71.86. I'd buy it long term, and then if for anything, I'd probably put 71.58 or 59, 71.60. That's only a 20 pip. Let's see here. That's only kind of like a 20-25 pip range. For how much return, you got 25 pips at a way better, area. Like a way better return. Let me see here. Let me go ahead and just like put this dang trade in really quick. Pretty upset that I lost that, but that's all right. That's what I wanted. So if you guys want to, go ahead and buy AUD USD. How close are we to say? So we could probably go ahead and buy GBP USD as well. Ooh, Eurocad. Look at you, baby. Let's drop the standard on that one. Let me see here. Odd USD, bought it. Cool. Now I need to go to my other account. Crap. This is what happens when you have like 2 accounts, guys. Be aware. When you have 2 accounts, it's hard to balance both. What? Oh, God. On this specific, wow, this is crazy. Huh. Hasn't opened the market on my other broker account yet. Oh, well, as long as I got an entry right where I got one. I mean, I got one on my second account, so that's not a big deal. I do need to get on GBP USD though, because I do not. That's definitely a good one too. Go ahead and buy it by market too if you want to. Okay, let me see. So it kind of did the same thing. It gapped down. So there's the third gap, and we're ready to buy, baby. We're ready to buy. So our profit potential on this one, as long as you put your stop like probably at 1.2652, I wouldn't mind having like at least a 50 pips on that trade versus a 25 pips on this one. Not a bad trade. I'd say that's a pretty good trade in my honest opinion. And just keep a reminder, this is a supply and demand zone, not, like it doesn't need to specifically perfectly. Stop loss 71.60. I would, yeah, 71.60 works. That's a good one. Let me see. And we're on GBP USD. Also, I mean, I did say that we did set a limit down here. Even though I set a limit like right here around 1.2686, it kind of respected, and this is quarter theory too, guys. It kind of did respect the 1.27 when it gapped down, and when it did that, that's kind of like, okay, that's your buy signal. So even though it didn't wait for us entirely, it's really not that big of a deal. So let me see if I can get another entry on AUD USD. Fudge, man. Right at my open. That's awesome. All right. Let me see if I can get it on my second account here because my second account's not open yet. I wish it would be. Come on. There we go. Nope, still not open. Son of a gun. Huh. Isn't that weird? Oh, there we go. There it opened. Did it stop me out? Nope, not yet. I guess I'm going to be waiting on that one. So, all right, let's move on. So on U.S. oil, let's look at U.S. oil. So this is going to be whenever the U.S. market's open, of course, tomorrow, Monday. That's when we're going to be heading to the moon, baby. I like the idea of black gold going to 64, at least 64. And the reason why is because it's a really significant turning point in the market, in my honest opinion. And even if we went to like 55, I mean, you drop like at least a 0.02, 0.03 on these type of things. Be very careful. Risk is kind of involved here. But you drop a pretty decent size, lot size, like a 0.0203, and you move from 50 to 51 or 52. It's not a bad trade. It's like 25, 35 pips. But just coming from the trade house perspective, I'm not a financial, investor. I'm a financial investor. I'm just not a financial, advisor. So me giving you this idea, this is just an idea. So just keep that between you and me and the rest of everybody that's going to be on, watching this on YouTube. So what I'm anticipating for Euro AUD, let's look at this really quick. So I kind of looked at the, I had a harmonic pattern scan on it. Let me see here if I can find it. Pretty sure I saved a picture of it too. Let me see here. Come on. Okay. Well, here's the thing. On Euro AUD, I knew that I saw a harmonic pattern, and it was a 4-hour harmonic pattern. There was just a Marubozu that kind of showed me at least a little bit of a bearish momentum. I'm not really convinced that this is going to go into a downtrend simply because, let's look at the Wyckoff method really quick. This right here, just like one little swipe to the low. Oh, let me grab here we go. Cool. So swipe to the low, another swipe to the low. This right here is going to be our spring. There's a gap, and that's the liquidity level. This being our liquidity level, this is where we're going to go ahead and just buy up, retest. Let's go ahead and retest 77, 51 or 1.5711 from where we're at 158.39. Move the market a little bit away from the buyers, and then hit their stops and go ahead and hit up again. And another reason why this is really why I feel like this would be a very respected idea, even though because this is a higher high. Like let's look at it this way, guys. Look at it from a 4-year-old's perspective. This is a higher high. So if you're looking at this and you're thinking this can definitely go down, I'm going to subtly disagree with you because it was very consolidated up in this area. Let's look at 1.63. So very consolidated, yes. And we were very consolidated for the longest amount of time. And if you look at it this way, if I'm looking like, okay, there's a harmonic pattern that's going to show me at least 100 something pips off the top, go ahead and sell it off anyways. We're at a, another accumulation level. I mean, like let's look at this little area, for example. Okay. Why is that not yellow? There we go. So that little area right there, I mean, that can technically, qualify for accumulation. So if it qualifies for accumulation, just keep in mind when you're buying up to like 1.615, the only reason why you'd be doing that is because when we're looking at our divergence play, right, looking at our other side, this is our sell. We're supposed to sell it. And it's not a long-term sell. It's not a turnaround. Keep that in mind. Every time that I tell you guys when we're getting on the RSI and we're doing divergence plays, what we're looking for are pullbacks or we're looking for turnarounds. And this right here was the technical turnaround with candlestick patterns that verify the turnaround, right? So now we're looking at this pullback, and how do we measure what the next movement's going to be? Market symmetry. So what's the actual impulse leg? Like what's the size of the impulse leg? Here's what we're going to be looking for, okay? It's going to be at least a 400 to 500 pip trade. It's going to need a little bit of room to move too. So if we come down here to say 1.57, take that trade from the harmonic scanner. Let's take a look here. Where's it at? We're looking at your AD. Probably have to refresh it. If not, if it doesn't show up on here, then I'll go ahead and just draw it up anyways and show you guys, which I don't think it's going to show up on here right now. So let's go ahead and just draw it up. So I was like from here to here to here to here to there. I mean, like that. It doesn't look like much of a harmonic pattern, but let's look at the properties of it. So 1.568 from the A to the C leg, not bad. 7.9 or 0.792 from X to B, also not bad. I kind of agree with it, but let's take it up to this last point right up here, because even if it's, I mean, like even though it kind of shows some bearish properties, it's not entirely. It's just not an entire. It's really just not an entire harmonic pattern, in my honest opinion. It still shows, and that's why I'm saying, like, you keep flexibility. You guys keep flexibility on the pairs. Keep flexibility on the technicals. Don't try to force anything in there. Like, hey, this could potentially be a long-term sell. Don't force trades, but look at it from multiple different angles. Keep an open mind when you're going in there. Marnie, what's your question?
It's just, I'm confused when you place a trade. Why is it when you place a buy, it's above where price is? Is that from the brokers, or it's annoying? Like, I don't understand why.
Are you talking like whenever I take a place on a trade on a Sunday? Whenever it's what exactly?
No, like when you place a buy, why is the green line like a metaphor above price?
And
like there's like a gap.
Price. You're talking about this right here?
I think she's talking about the spread.
Why?
Is that the spread?
Oh, you're talking. Okay, I got you. You're talking about whenever you're going into like your MetaTrader 4, you're looking at it and you're like, why is the spread so huge? Is that what you're talking about?
Yeah.
Well, because I'm gonna be completely honest with you. I don't know. Brokers for some reason during like 4 o'clock around this time frame on Sundays, and for some reason on Sundays, I need to lock in this position on AUD USD on my new or on my second account too. Lock into new positions. So, anyways, so I guess like the reason why they put like spreads on there is just to kind of like stop out traders. I mean, like of course, banks, institutions are all behind the movement of price, slippage. There's so many different different ways to look at it. I'm not entirely sure like why all the time there's there's spread, but that's just part of the market. So
Okay. Thank you.
no problem.
I can offer a little bit of insight as to why spreads widen around this time.
Go for it, brother.
So what tends to happen is market open every day on Sunday creates a large influx of just general volume in the market. And so when volume increases, brokers are, of course, looking to increase their profit. So they widen spreads marginally on every single pair. So like for this case right now, Sydney's session just opened. So of course, Sydney is going to have the largest spreads. So like AUD USD, yeah, the spread seems pretty wide. But if you look tomorrow around this time, it's not going to be nearly as wide because we didn't have a gap of no trade sitting out there. It's the same reason that we get swap. It's the same reason that price fluctuates a little bit as you pass over the 000 GMT. It's all related to brokers and how they have to make their money based on influx of volume.
Bang. I like that. I like what you just said there. It helped a lot, actually. I'm like, I don't even know what I'm talking about now. I'm over here. I'm like, I know how to do technicals, but I don't know like the underlying, stuff of like brokers and stuff. All I know is like get tight trade, get tight pit. What do you call it? Get tight spreads. Tight spreads on whenever regular hours happen, and just trade. Goof. I appreciate that, Max. Thanks for the insight on the spreads.
Oh, that was actually Ethan right here.
Appreciate you, Ethan.
Got to give credit where credit's due.
Peace. Awesome. See it. Learn every day, man. That's awesome. So with that being said, I mean, those are the trades that I'm looking at really. Long term, I'm looking for a sell, like short term sell on Euro AUD, buy all the way to like 1.15. So I'm placing my buy limit like right around 1.5, 7-Eleven. Let's all go to 7-Eleven and get slushies. I'm buying AUD USD. Obviously, there's still some support left there. So don't worry if you got stopped out. I got stopped out just now on a couple of positions. Thank God one of my accounts didn't get stopped out on it. So now I'm a little bit heavier in AUD USD at the moment. And we're also kind of heavy right now in GBP USD. Not stupid heavy, but we've got some nice positions, accumulated with GBP USD, getting ready for that nice buy, prepare for at least 500 pips, I'm thinking. AUD USD, same thing. So, prepare for at least 179, 180. Euro AUD, I mean, if you follow this to the T, if you guys want to do this, I wouldn't recommend it. Sell it all the way down here to 1.5711, have about 127 pips bagged in the pocket. And then buy it all the way up to at least 1.6151, what I'm looking for. You can do that. And if you're accumulating some orders on oil as well, go ahead and take some buys on oil. Buy oil whenever the market opens. If you can get a smaller price, go for it. If not, good price at 52. Just make sure that if you're trading it marginally, have a decent stop on it. Don't put too much pressure on your positions. And then just buy it up to 55, buy it up to 64. When I'm saying, guys, don't put too much, don't get too heavy in your trades. I mean, don't use stupid heavy lot sizes. Use some decent lot sizes for your account. Don't try to overextend yourself to where you're going to blow your account in 4 or 5 trades. But get a little uncomfortable. Use some higher lot sizes, guys. Use a little bit higher lot sizes, because I'm sure that if you guys start to get – the more comfortable you guys get with the trading style that I'm projecting here, And you guys, because I've seen some guys like Vladimir, guys have, he lives in Baja, Mexico, and learned how to trade almost exactly like I do. And the guy's like collecting stupid amount of pips. And I'm just like, God dang, dude, where'd you learn how to do that? He's like, I keep hopping on your calls. Guy literally puts up like charts almost pretty similar to mine. I'm like, God dang, dude, that's ridiculous. People can literally mimic every single, strategy that you have. If you pay attention enough and you mimic literally almost everything that, your favorite trader or your favorite educator does, dude, you'll start getting results like they do. So with that being said, let's go ahead and peace out for now. If you guys have any questions, hit me up in the Telegram. I'm going to go ahead and post this on YouTube. Guys, let you guys go ahead and take a look into some of the ideas have. Do you guys have any questions?
I actually do. I got 2 questions on AUD USD and GBP USD.
All right.
I was wondering if we could go over where the take profits are at and just kind of how you determine it. Because I've always been more of an intraday trader, so my strategies have always been super different than just like swing trader strategies.
Okay. All right. Cool. I like that you asked that question because like I'm an intraday like by what do you call it? By trade, I guess. I'm an intraday trader too. I like collecting like 50 to 100 pips. So like for me, whenever I'm looking for, my take profits, and I'm really just looking for like a zone, kind of like a zone-ish. So like GBP USD, for example, we don't really have a lot to lose on this one, only because like this is where we wanted to buy previously. We've been talking about buying AUD long-term for quite the longest time. And I feel like this right here, God, thank God this happened. I'm so happy that it happened. Like, even though I got stopped out of one of my positions, I'm cool with that because, we have a lower price that we can get into. And when I'm talking about like, some take profits, like I'm looking more like where's the structure at, like where the accumulation level's at, you know what I mean? So there's an accumulation level right here, 72.98. There's another accumulation level right up here at 73.18. There's another accumulation level. And of course, like right between the gap, I didn't put it there for obvious reasons. I want to come back up and cover that gap. There's a wick right up in here to say 73.56. I'm looking at like market structure, man. Never really into the whole Fibonacci, like Fibonacci extensions are my take profits. Market structure, I feel like is where it's at because, like let's, look at flat, like we're really used to looking at horizontal flat lines, aren't we? You know what I mean? A lot of times, like we look at our windows, for example, like the window sills, everything's like flat, right? But if I come up here and I look at all these triangles, I'm going to look for the most flat areas where price kind of tested. That's our ceiling, right? So when we tested those ceilings, like look right here, like the very first one, the 72.96. Can you see that?
Yeah.
Cool. So that was like, see where it's so flat, like right here, back in November, and then back like November 15th, 14th, like a couple of days where it was stupid flat on hourly. Like this is more of your type of trade right here, intraday. I mean, like it's gonna hold for, you're gonna want to hold it for like at least a week, maybe. That's kind of a swing trade, but still. AUD USD kind of moves slowly, so you're gonna have to hold it for a little bit longer. Other pairs like GBP or GBP JPY that move a little bit faster, that have like higher volatility, that's where you're really going to be able to hold intraday like 100 to 200 pips. Like what's your aim whenever you trade, Max, as far as like profits?
Usually like 30 to 100 pips.
Usually like how much?
30 pips to 100 pips. I always take like a position and just close out at 30 at one trade and then usually go for either like 60 to 100 after that.
That's not bad. What is your risk on those trades though?
You mean like percentage on account?
Like not percentage on account, like how many pips are you risking whenever you're trading those? Like 30 to 100 pips.
20 to 30.
So 1-to-1. Okay, cool. As long as you're keeping like a 1-to-1, that's really honestly what matters, I think. Like as long as you're keeping a 1-to-1, because a lot of people tend to like scalpers, for example. 20 pip, like I look at them like, I'm not bagging anybody, but like whenever I listen to like scalpers from Mino, I'm like, bro, 20 pips for 6. What the hell are you doing? Like, what if somebody's inaccurate? Like, I mean, like I get it. Like you're trying to get like 5 pips out of one trade, but that'll make no sense. That doesn't give you like the whole, like, if you can get like strong swings like that, like just, higher time frame swings like this and get like up to 200, 300 pips and risk 50. I'm more cool with that than risking 20 pips per trade. You know what I mean? So I'm on your case on that one. So now as far as your stop loss, where am I looking for a stop loss, right? Well, let's look a little bit further back. Like, yeah, I kind of had an early trade where I was looking for the buy, but funny thing is, if you look at that gap right there and the divergence exactly where market structure is, how flat it is right here, it's a whole support or demand zone. So if we have a demand zone where we're literally pretty much flat and we've only tested it once, like we broke through it once, and we had a strong movement away from that area, I'm gonna venture to say that we're gonna continue in an uptrend. Because we've moved so strongly away from it. If you've noticed multiple times where we've moved strongly away from it and moved strongly through it. So even though we didn't break all the way down here, as long as we don't break down here to 71.66 or break down past 70.60, past this, where this previous market structure has candlestick patterns in it too. So, as long as we don't break past this area, this green area, we're pretty solid. We're pretty solid on. Our stop loss is going to be a little bit below our last piece of market structure in the past, but that's how I determine stop losses on trades too.
Okay, and then because GBP/USD as well, when you get the triple bottom, you're kind of just putting it you're putting it pretty much under the triple bottom as well, and then that's kind of how you determine the stop loss in GBP/USD.
You're talking about this one right
here? Yeah, that triple bottom right there that we see. So you're putting the stop loss like 20, 30 pips under that is kind of what you went for?
I'm going for like 50 pips because this is an accumulation. This is like a big, stupid, huge accumulation box. Yeah, it's a range, but it's also an accumulation box. It's a range. But as soon as we started doing this right here, I'm kind of like biased towards the upside on it, only because we didn't break through it strongly. And if we're not breaking through it strongly now, then we're not gonna break through it strongly anytime soon. So,
so you're going for like 1,000 pip take profit on 3,617.5.
Have I what?
You're going for like 1,000 pip take profits on 3,617.5.
Have I ever done 1,000 pips take profit? No, but I've done 500.
Yeah.
1,000's pretty. That's you're gonna wait a pretty long time to get 1,000 pips. This one right here is pretty close to 1,000. I'm sure. I'm pretty certain we're probably going to hit that. If not, my first take profit's going to be at like 1.3264. I can't wait that long. For other people, like this is my outlook. This is just like a longer term outlook. But intraday, this gives a lot of people scalping ideas, intraday ideas, swing trade ideas, and position ideas. That's really what market outlook's for, is just for you guys to come and ask me questions. And then we're really just looking at market structure from a bigger time frame. So looking at it from a bigger time frame gives you a little bit more insight as to, hey, what should I do, intraday? 3 o'clock, 8 o'clock in the morning, whichever one I might want to go ahead and just buy it up. So, it's just kind of my idea of what's going to happen. I'm going to hold it long term though. So,
Sweet.
So, hey, no problem. If does anybody have any more questions before we get off here? Because we've already hit our hour mark, and that's how long I like to keep our sessions. So without further ado, ladies and gentlemen, I will leave you to review this video on my YouTube channel. Make sure to go ahead and click subscribe and every other action that comes with, being on a YouTube channel. Obvious. Let me go ahead and stop the share. So for those of you who tuned on today, very, very special. Make sure that you guys keep on, getting on here with me, because I'm shooting out some pretty, wild and out ideas, some pretty huge trades. We're already in profit, in two of the trades that I've called so far, GU, AU. AJ, came back with it last week, hit 239 pips. That was a whole week. If you can hold trades like that for a whole week, 239 pips, come on. If that's consistent, you're getting a solid 200 pips a week. Whew. I wouldn't want to miss these market outlooks for the world if I were you guys. But I appreciate you guys, every single one of you guys getting on here with me. You guys are the main reason why. You guys are the main reason as to why the market outlook's there, why I do what I do. So I have to say that I'm super grateful, happy, and honored that each and every one of you guys would tune on here to listen to my opinion about the market. And if you guys have any questions, like I said, go into the Telegram, ask me questions on YouTube. I'll get back to you guys as soon as humanly possible and answer all of your questions. So I love you guys. Thank you guys so much for being on here. With that being said, have a great trading week. Let's make some money. Let's, bag the pips. Let's get in it, guys. Peace out.